Namaskar and thank you for joining us here on the Economic Brief, a program that looks at the key stories from the worlds of economy, business and finance and contextualizes them from local as well as global perspectives. On the program today, we look at how Mumbai has overtaken Beijing as Asia's billionaire capital. Baluchistan, the restive Pakistani region bordering Iran, is rich in minerals, but it remains the country's most backward place. Why? And New Zealand plans to cut down on tourists to save resources. The country gets almost as many tourists as their population of around 5 million people. And we leave you with the key business stories in brief. But first, let's look at how Mumbai has overtaken Beijing as the billionaire capital of Asia. Coming up on the screen behind me, we are going to look at a few figures that identifies. Here we can see that Mumbai now has 92 billionaires, one more than Beijing. Beijing, in fact, has 91 billionaires, and Shanghai comes third in Asia with 87 billionaires. In fact, Mumbai is the third on the overall list. Before Mumbai comes New York and London. So 92 billionaires in Mumbai, making Mumbai the third, the capital, in fact, of Asia as far as billionaires are concerned, and the third richest city, in a sense, in the entire world. If we move on to our next slide, this is according to the Hurun list. We are looking at the Hurun list of 2024, and if we break down, we can see that Maharashtra has the highest number of high net worth individuals, that's 470, and we define a high net individual as somebody who has more than 1,000 crore rupees. So more than 1,000 crore rupees, there are 470 of them in Maharashtra, and a good 386 of them are actually in Mumbai. And if we look at Delhi, we can see that Delhi, of course, is a city as well as a state. It has 217 high net worth individuals, all above 1,000, some above 5,000 crore rupees. Gujarat works out to 129, coming in third as far as states are concerned, and then Tamil Nadu with 119. Telangana has 109 and Karnataka has 108. But the significant part about all these states is that a large concentration of the people with high net or have high net worth, they are in the cities. They are all in the cities. If we look, the capital, Mumbai of Maharashtra, has 386 high net worth individuals. Delhi, of course, is in itself 217 such individuals. Hyderabad has 104, and we did see that Telangana had 109. So the whole of the state has 109 high net worth individuals, and Hyderabad, the concentration of them are all in Hyderabad, the capital, with 104. And the same thing with Bengaluru. Bengaluru has 100 of the 108 that are in Karnataka. Chennai, of course, is 82, and we did see that the whole of Chennai, the whole of Tamil Nadu had about 119. So these are the richest people in India according to the Hurun list. And Gautam Adani is ranked number one with $139 billion. He, of course, deals with commodities and infrastructure and diversified, actually. Mukesh Ambani is also diversified and $122 billion. And Shiv Nadar, who's in software services mainly, is at $37.8 billion. These are the top 3 billionaires in India. So let's talk to Dr. Nilanjan Banik, who's with us, professor at Mahindra University. Dr. Banik, if we look at this situation, do high net worth individuals, in a sense, their wealth, does it trickle down at all in the economy? Would we say that that actually works? Or how do you think, or do they increase employment?
I totally agree that this high number of individuals who are now reflecting in the Harun's list, has to do with the fact that the Indian economy overall is doing great. Because in terms of the growth rate of GDP numbers over the last 3 years, India is the only large economy which is growing in excess of 7%. Now, let me tell you a basic reason why we are growing so fast. One is, if you look into the median age of working population in India, it is around 28 years. In China, at this point of time, the median age is around 40 years. Why I'm talking about this median age? Because research has shown that if you're crossing that 40 years as the number, your consumption expenditure actually keeps on falling. You don't tend to invest or consume as much as what you do when your median age is around 20 or 28, or for that matter, even 35 years. Now, precisely because of that, Indian economy continued to do well when it comes to the consumption expenditure, which also means that unlike China, where the consumption expenditure is falling, India's market continued to grow. And this number of billionaires that you see is an outcome of a growing market. It's an outcome of a better run institution, because institutions are also very important for any economy to grow. For instance, when you look into the growth of US, or for that matter, South Korean, or for that matter, Japanese economy, institution matter. So in case of India, we have very strong sets of institution, be it Reserve Bank of India, be it TRI, be it SEBI, things like that. Apart from
Okay.
that, another added advantage for India is, for our median age to reach this number of 40 years, is going to take another roundabout, because India is going to reach that median age of 40 years in the year only 2052, which means we have around another 27 years before our consumption starts to plateau. So, in that way, I think India's economy will
Yes.
continue to grow. And another factor which you should also note, the cost of doing business is coming down in India thanks to this jam trinity:
Okay.
Jandan account, bank, mobile banking system, and also the other combination of all these things. What has led to is, because in India, the cost of data is so low. In fact, the cost of data is the least in the world in India. So
Right.
because of that, you see small businessmen, traders, they're able to do business. And
So
when they are
you,
doing business, the operating cost of capital itself comes down, which is
sure.
also showing up in their profitability, which
So
is
you
also
believe that
enhancing growth,
you
not
believe
only
that
in
the
the
trickle
urban
down is
sector.
taking place. The trickle down is
Yes,
taking place.
the trickle down is taking
Okay.
place for this reason I just now stated.
Right. Dr. Banik, also, is India now better placed for innovation and entrepreneurship, given that the high net worth individuals were also going to be increasing their investments for their own returns, and many of them could be angel investors. Some of them could be, investing in startups and things like that.
Absolutely, because if you look into the number of global capability centers, these are actually the multinationals opening up their office in India to do various type of research R&D activities. You will find India now house close to 1,600 global capability centers. And if you look in terms of the percentage terms, across the world, India is housing 45% of the total global capability centers that you see across the world. What that is leading to, it is leading to many more investment coming to tier 2 and tier 3 cities. We also see much more R&D activities happening. For instance, small cities like Indore are filing, if you look into the patent being filed from India by the multinational companies, it has grown by leaps and bounds thanks to these global capability centers which are now operating out of India. If you talk about Pune, Coimbatore, Maharashtra, within Maharashtra, Mumbai, you just spoke about the Mumbai, even Chennai, um, uh, other places like Patna, these are all the places which are now attracting foreign direct investment, where
Right.
the multinational companies are setting up their office in terms of the global capability centers, which is not only attracting fund, but more importantly, it is attracting global technology as well as R&D. Because one thing you should notice, the reason why South Korea is South Korea at this point of time, during 1950s, per capita income of South Korea and India were more or less similar. But now you will find that the South Korean per capita income, they have actually migrated to a developed country. And the reason being, at that point of time, they were investing in primary education as well as R&D activities.
Okay.
Something what has started to happen now, even the government is taking initiative in terms of the PLI scheme that we see, and also in terms of giving more emphasis on the manufacturing capability, to how to increase the manufacturing capability in India, which
Sure.
in a way will attract foreign multinational companies to come and set up their factories in India, which also alongside will bring the technology. And because India is developing into an R&D hub, thanks to the foreign multinationals setting up their global capability centers, I think
Yes, Dr.
that
Banik.
going forward, this a combination of research and development, a lower working age population, and the availability of talent pool in India is going to
Right.
make more billionaires in years to come.
Okay, but Dr. Banik, is there a problem that you see, that wealth is being concentrated in the capital cities by a large proportion? You're in Hyderabad. Hyderabad has 104 HNIs, I mean, high net worth individuals. Telangana as a whole has only 109. So, I mean, a vast majority are there. Also, we can see that, real estate prices and everything, their asset wealth continues to increase. Life becomes pretty hard for others living in these cities because these people have large buckets of money and can start, distorting prices. What do you think?
So in India, we have a scenario where, of course, the rich are becoming richer, but also poor are also becoming richer. It's not the case that only the rich are becoming richer. And this trickle down is absolutely happening. If you look into the Gini coefficient, that's how you measure the extent of inequality across across various countries. You will find that the Gini coefficient for China and US is actually higher than that of India. So to say that the wealth is getting concentrated, yes, it is getting concentrated, but in terms of income, the possibility to or the opportunity to earn income, I think it is trickling down. And the reason is the lower cost of data, which has kind of democratized the possibility to do business, which is also enabling the small traders to help with their credit history. So the bank, which otherwise wouldn't have given loan to this kind of small traders, now after looking into the credit history, thanks to the activities happening through PhonePe or GPay, they are now becoming eligible to get loan. So the trickle down effect is of course happening. Now one should also try
Right.
to tell you that there is a distinction between wealth and income. Wealth is a stock concept. Well, income is the flow concept, meaning that how much
Right.
money I'm earning every year. So in terms of, because of all this thing, lower data cost, lower working age population, high consumption expenditure, and a big domestic market, these are all leading to activities where the income potential and the income opportunity for the small traders as well as the small
Yes.
businessman, it is growing. And that's why you see that the Indian economy will continue to do well, like what you just mentioned.
Right. Dr. Banik, stay with us. We're moving on to our next story. We'll expect your comments on that as well. This is a story about Baluchistan, Pakistan's restive southwestern region bordering Iran. It's rich in minerals, as we know, including gold. Now, the China-Pakistan Economic Corridor and the Gwadar port, they are Chinese investments in the region, and these are not being received well by the locals. The locals believe that Pakistan government's use of Chinese resources, it gives the Chinese an unwanted hold over the region. Let's look at this report.
Balochistan is the largest province of Pakistan. It is rich in natural resources and has huge potential to boost the Pakistani economy. Balochistan is known for its significant reserves of natural gas and coal. Large deposits of copper and gold are found particularly in the Reko Dik area. Hence, mining has significant potential. Wheat, barley and fruits are cultivated along with livestock amid the tribal lifestyle of its inhabitants. The coastal areas, especially around Gwadar, support a thriving fishing industry, and the Gwadar port is a strategic port and part of the China-Pakistan Economic Corridor. Despite these resources, Baluchistan remains underdeveloped compared to other parts of Pakistan and faces inadequate infrastructure and political instability. CPEC, said to have development commitments worth $65 billion as part of Chinese President Xi Jinping's Belt and Road Initiative. Pakistan has not been able to develop the infrastructure needed to tap mineral resources in the poverty-stricken Baluchistan and hence has sought China's help in developing the province. But the locals see the Chinese as a colonial force with exploitative interests that don't benefit the region. The Baloch Liberation Army, an armed secessionist group, took responsibility for an operation they called the Haruf, or the Dark Windy Storm, in late August that left 73 people dead. They were clearly against development projects that are part of the China-Pakistan economic corridor.
This incident has left its impact on business. The residents are scared to travel. I request the state of Pakistan to bring the situation to normal. It should sit down and hold talks with whichever groups are doing this and resolve the matter. A gun is not the solution to a problem.
As this Chinese-built plane takes to the skies at a land port on the China-Pakistan border in the Parmese region, it is clear that the Chinese authorities are banking on the potential success of the Belt and Road Initiative.
Non-financial direct investment from Chinese enterprise into countries participating in the BRI came in at 17.94 billion US dollars, up 7.7% year on year. The turnover of contracted overseas projects amounted to 86.28 billion US dollars.
While China seeks to make greater investments in the China-Pakistan economic corridor, the safety of those investments are subject to the perceptions the local people have of Chinese colonial intentions. The Economic Brief, DD India.
Well, Dr. Banik continues to be with us. Dr. Banik, does China need to work on gaining trust of the people, even if it's dealing with the federal government of Pakistan, considering that this is a restive region? Should the local government be playing a bigger role there?
If you look into the motive of China, they are there to do business because they want to get access to the port. And that's how they are building this road through this tribal region. Now, if you want to see why this is so much restive, for that you'll have to actually see what's happening in Pakistan. In fact, the Pakistani economy is in tatter. It has gone to IMF for 23rd time, every time asking for kind of saving their economy from the external debt crisis. Now, unlike India, in Pakistan, what you see is the institutions are not that strong, and the army play a major role in terms of deciding who are going to be in the political party or which political party are going to be in power. Now, again, unlike India, in Pakistan, what you have, the real estate sector, they are not taxed. And most of the land actually are being cornered by the generals of the armies. So these are the people, because it's not taxed, they have access to all the land, and they build the real estate, which in turns actually help them with the profitability, because over a period of time, the price of real estate goes up. And because there is no tax, most part of this are cornered by these army generals. Now, if you look into this Baluchistan area, in terms of investment in health, education, nothing has happened. So, of course, if you are not educated, if you're not healthy, what do? You actually take up arms. So it's not surprising that the Baluchistan people are taking up arms against the army, in particular from the Punjab regions, because most of the army generals who are actually trying to develop the real estate sector in the Baluchistan area belongs to the province of Punjab. So that's why you see most of the restive element coming in. So far China is concerned, they are more interested in the mineral that is there, because this is a very mineral-rich country, like what you see in case of Afghanistan. So in addition to exploring the mineral, in addition to getting their goods and move to the Gwadar port, Chinese, I don't think, have any interest in terms of developing that region, in terms of investing in terms of hospitals, or for that matter, education, which is very, very important for any economy to grow. Now, the Pakistani economy is, in a way, it's cornered. It's a highly corrupted economy, because I said that the institutions are not strong. It is primarily run by the army, although we have a democratic society, but nothing is happening for the people from that region.
Okay. Dr. Banik, how best can these resources then be put to good use by Pakistan to help its economy?
So one thing what India is doing, that we are auctioning, it's very transparent, But here in Pakistan, we are talking about the political class, we are talking about the elite class, who actually are cornering most part of the wealth which is emanating from the real estate sector, as well as from the extract-based economy, like the mining sector. So for that for the people to get benefit from, I think there is a need for the court system to be much more independent. There has to be a proper competition policy in place, something that we are seeing in the context of India, where our Supreme Court is quite efficient in terms of whenever we see any problem, if there is an apprehension that the allocation are not done properly, the court intervene. That is something we don't see in Pakistan, because most of the elite, be it the political class or be it from the army, they are actually cornering maximum wealth because of lack of property rights and because of lack of a proper institution, effective institution.
Right. Dr. Banik, a final question. Would the major investor, in this case China, be expecting a larger share of the pie, as you've been describing? It's already managing the Gwadar port. But do you see the BRI, of China actually stretching China's resources negatively rather than increasing its influence? Because many countries are beginning to struggle with what China has been doing.
That is a possibility, because what China is doing, they have already built their own resources when it comes to the infrastructure. So the only way they can invest their capital is outside China, be it the poor African countries, or in that case, as we speak, is in Pakistan. Of course, there is an element of risk that what we are seeing right now. But I think whenever, as an investor, you are investing in any country, you already have taken into account this element of risk. So hopefully, what the Chinese believe at this point of time, the expected gain from the accessibility to the port is more than some of these incidents that we are seeing.
We've run out of time. Thank you very much, Professor Nilanjan Banik. Thank you for your inputs on this story. Now let's move on. In fact, New Zealand, a country with a population of around 5 million people, they had more than 3.2 million tourists in 2023. So the authorities feel that excessive tourism is in fact a strain on the resources of the Pacific Island country. Let's look at this report.
With the slogan 100% Pure New Zealand, the geographically isolated country has been attracting tourists due to its national parks and serene mountain trails. Tourism is New Zealand's second biggest export earner, but it's also taking a toll on the country's natural resources. New Zealand, which has a population of over 5 million, hosted 3.2 million tourists in 2023. Citing environmental protection, the government will be increasing the international visitor and tourism fee by 3 times starting October 1st. First introduced in 2019, the fee has been increased from $22 to $62.
Well, the IVL is actually hypothecated for 50% tourism and 50% conservation. So what we want to do is shift some of the costs from the taxpayer to the visitor, and ultimately what we want to do is grow tourism.
While authorities insist that the tourist tax would not deter people from visiting the country, the hospitality sector is concerned that revenues will dwindle.
So I think New Zealand's right up there at the moment at being one of the most expensive places to cross the border for a holiday. And that really means we need to think carefully about our economic strategy.
New Zealand's tourism industry is yet to recover from the losses incurred during the COVID-19 pandemic. the country is hosting 20% less tourists when compared to 2019. Australians, who account for the maximum number of international tourists to New Zealand, have been exempted from the entry fee. But visitors from other top markets including India, US, Germany and UK will have to pay. To add to the tourism sector's woes, authorities also plan to increase charges on regional airports. The Economic Brief for DD India.
Well, that's a wrap on this edition of the Economic Brief, but we leave you with, with a business wrap of the key stories in brief. Thanks for watching. Namaskar.
Bollywood actor Shah Rukh Khan has been named the highest taxpayer among Indian celebrities for the year 2024, according to a report by Fortune India. He paid 92 crore rupees in taxes. Cricketer Virat Kohli emerged as the highest taxpayer among sportspersons. He paid 66 crore rupees in taxes. Tata's Big Basket is set to merge its BB Daily subscription service into its main app as it seeks to strengthen its position in the quick commerce market. India and Singapore signed MOUs for cooperation in semiconductors, digital technologies during Indian Prime Minister Narendra Modi's visit to Singapore. China has urged the US to immediately lift all tariffs on Chinese goods ahead of an announcement by the Biden administration on expected hikes in levies on Chinese-made items. Auto giant Volvo has abandoned its plan to produce only fully electric cars by 2030, saying it now expects to sell hybrid vehicles. For the first time in its 87-year history, automaker Volkswagen is considering closing a factory in its home country, Germany, as competition from inexpensive Chinese electric cars hits sales. Japanese automobile firm Mitsubishi is planning to lay off over 400 staff at its factory in Scotland's Livingstone. Telegram has apologized to South Korean authorities for its handling of deepfake pornographic material shared via its messaging app. US employers posted fewer job openings in July than they had in the previous month, in a sign that demand for workers has weakened.